Welcome back to Talkpoint. Today's big story comes from Washington, where the Federal Reserve has decided to keep interest rates unchanged at 5.25%. The decision comes from after months of aggressive rate hikes and at fighting inflation. And now, with signs that price growth is finally cooling and the Fed is hitting the pause button. But don't celebrate just yet. Fed Chair Jerome Powell made it clear if inflation fares up again, another rate hike is still on the table. Federal Reserve building 5.25% rate text overlay. After its two-day policy meeting, the Federal Open Market Committee announced it will hold the federal funds rate steady. The interest rates banks charge each other for overnight loans. That benchmark rate influences everything from credit card APRs to mortgage rates and auto loans. By keeping it at 5.25%, the Fed is signaling caution optimism that inflation is moving in the right direction. Powell said at the press conference, "We are encouraged by recent inflation data, but we are not declaring victory. Our job is to ensure inflation is sustainably back at our 2% goal." Grocery store aisles, gas station prices, shipping containers. Inflation has cooled from its peak over 9% in mid-2022 to about 2.6% as of July 2025, according to the latest Consumer Price Index. Gas prices have stabilized, grocery costs are growing more slowly, and used car prices are even falling in some areas, but housing and race costs remain stubbornly high, which the federal continues to watch closely. Charts showing interest rate hikes over past 2 years. This pause is part of a careful balancing act. If the Fed raises rates too much, it's a risk tipping the economy into a resilience. If it cuts too soon, inflation could come roaring back. Recent job market data has given the Fed room to pause. Unemployment remains low at 3.8%, and while job growth has slowed, wage increases are finally starting to align with productivity gains, a sign the economy may be cooling without crashing. New York Stock Exchanges flooring, Wall Street signs, traders on phones. Markets reacted with modest gains after the announcement. The Dow Jones Industrial Average closed up 0.4%, the S&P 500 gained 0.3%, and the tech-heavy Nasdaq saw a smaller bump. Investors had largely expected this decision, but Powell's comments about a possible future hike kept enthusiasm in check. People at bank counters, seeing mortgage papers, checking online banking apps. So, how does today's decision affect your wallet? Credit card rates still near record highs, averaging around 20% APR. Mortgage 30-year fixed rates are hovering around 6.8%, down slightly from last month. Car loans, new auto loan range remains high, around 7% to 8%, but stable. Savings account. High yield savings rates are still above 4.5%, which is good news for savers. If you have high interest debt, now is still a good time to work on paying it down because rates are not likely to fall significantly in the short term. Icons for energy price, global trade, housing. The Fed's next move will depend on what happens in the coming months. Key risks include: first, energy prices. A spike in oil could push inflation higher. Second, housing costs. Rent and home prices remain sticky. Third, global uncertainty. Supply chain issues or geopolitical tensions could drive up costs. Economists are split. Some believe the Fed's next move will be a rate cut in early 2026, while others say another small hike this year is possible if inflation ticks up. Federal Reserve building at night. Economic report headlines. The Fed's next policy meeting is scheduled for next late September. Between now and then, officials will monitor inflation, jobs, and economic growth data. For everyday Americans, the message is clear. Don't expect a big drop in borrowing costs anytime soon. The Fed is determined to keep inflation under control, even if that means keeping rates high for longer than some would like. People shopping Wall Street, Federal Reserve flag. To sum it up, today's decision means a caution pause, not a full stop. Inflation is cooling, the job market is steady, and the Fed is holding the line for now. We will keep watching the data and bring you the latest on where rates, prices, and the economy are headed next. This is Talkpoint. Thanks for watching, and remember, your financial health starts with understanding the bigger economic picture. Stay informed, stay prepared.